Hello guys, in this video we will be learning the structure mapping, although we have it in the previous part, but I want to actually tell you the 75% Fibonacci, how you can use it for your entry. And this kind of model, I think is one of the most important video for you to that you can watch. So when you watch this video, I believe it's going to improve your profitability. So we are talking about structure mapping plus 75% Fibonacci. So I will illustrate it here, and then I'll go to the chart and also give you a real chart experience. So let's say we have a structure like this. First of all, we need to understand our trading range, then before we now apply 75% Fibonacci. So in a situation like this, you can see, as I said in the previous video, when you have a market moving impulse correction, this is not a structure. So first thing you have to do is to identify your inducement. So this level will serve as your inducement. So after that, you wait for the market to come here and take out your inducement. Immediately market take out your inducement, then what you need to look for is probably a POI, but in this video we are not talking about POI. Our entry model is just Fibonacci. So you wait for the structure to complete like this. Then you can see that we now have a complete structure like this. Market broke this level. So it means that we have our trading range from here. Anything above here is what we call change of character. Then we now do what? We look for our inducement. Currently, this is our inducement. But in a situation that market created another inducement like this, refused to take out this and drop like this, then it means that our inducement will be shifted to this level. This is our major IDM, this is our minor. But whichever way, we wait for market to come and do what? And take out this IDM. Immediately this IDM has been taken out, what are we going to do? We look for our Fibonacci, then we draw it from this swing high, this high of the structure, to the low of this level that the market created, and we drag it like this. Then we look for POIs that fall in between here, but I don't want to talk about the POI, so I want to go to 75% direct entry. If you are looking for POIs that fall into 75%, that is likely to be an extreme POI. And if you prefer to use POI directly, then that will be a refinement of this 75%. So when you have a situation like this what you are going to where you are going to wait for the market. Sometimes markets will play around and do what? And drop. This nothing, is okay. It's called a mixed trade. And I said we don't need to run after the market. We allow the market to come to us. So this setup will be invalid. So we reposition again. So look at this. This is going to be our high. So our swing point, then it means that we have our break of structure here. So what are we going to do again? We look for our inducement, which is this. Then what are we going to do? We wait for market to take our inducement like this. Immediately market take out this inducement, then we go straight towards to our Fibonacci and draw our Fibonacci from this swing high to swing low. Then we place our limit order, or we wait for market to get here and put our stop loss here. Then we take 1 to 3 depending on what you prefer to take. So, and you will see that market will fulfill your order here, then probably drop. So when you have a setup, you don't need to stress yourself. This is one of the easiest approach you can have in the market. This is one of the easiest, and this approach will make you a lot of money, most especially if you are using it in what? In a moving, in a trending market. So all you need to do is to look for a trending market and apply this structure plus Fibonacci, and you will be surprised how the outcome will be. Sometimes, in all strategy, you have to know or understand that you will miss trade. Some trade will not come to you. Some trade will hit SL. Some trade will hit TP. So it's part of the game. But once you understand this model, then you have nothing to stress about when it comes to this market. So let me show you how it is in the market, in the real chart. For example, I have a sample here. Look at this. So market market was temporarily bullish like this, then suddenly we start having a bearish momentum like this. So now I will start by marking the structure. You can see market creates this level like this. Sorry let me let me make it bold for you guys to see. So as you can see, market was pushing up, pushing down, then at the end of the day give us break of structure. Market use this level as inducement, then take out the structure here. So it means that our swing low is here. So if you have a situation like this, we are expecting the market to do what? We're expecting the market to buy from 75%, and as you can see, if I pull my Fibonacci from here to 75%, you can see market actually buy. But this have like a break-even trade, because if you are to take a trade here, put our stop loss here like this, we'll be targeting this level of 1 to 3. Then at the end of the day, after this, you can manage your trade, and probably this will end up in break-even or SL. So this is not where I'm going to. So as you can see, this level was violated by the market, so which gives us what we call change of character. So it means that market is telling us that it's not going up again. Now you want to go for to bear you want to sell. So bearish momentum started after market take out this level. So, and as you can see, what do I say immediately the market take out the give us change of character? Then what next are we going to look out for? We look out for our inducement. And as you can see, when market was coming down, we had to look out for the last pullback the market did before or after change of character or break of structure. As you can see, we have something like this. So it means that our inducement will be here. Our inducement is going to be here like this. You can see. Okay, I can see that the market also created another pullback here like this. If you look at it, small one, small pullback, then drop. So this where our inducement will be. So you can see. So market actually did what? Immediately it took out inducement. What are we supposed to do? Take our Fibonacci from the high that the market created, then to this low. From this high to this low, because this is the high that market created that gave us this change of character, and this is the lowest the market created. So we'll be waiting for something here, something like this at 75. After market took out data inducement, we'll be waiting for 75 and probably target 1 to 3 like this. But in this situation now, you can see that market did what? Market refused to fulfill our what? Our plan. And what does market do next? Let me remove this. What does market do next? Market breaks structure after taking out the inducement. So it means that we have a structure here, and our trading range is here. It means that our trading range is here. Market is not supposed to break this level if the market want to continue selling. So now we have our trading high, then we have to wait patiently for market to do what? To give us our low. And as you can see, when market was coming down, gently come down, gently come down, then drop, then give us another one here. So if I to remove it and expand the chart, you can see what I just said. So in this situation, our inducement will be here like this. This is where we have an inducement. So, and immediately market take out the inducement. What do I say we have to do? We have to go straight to our Fibonacci and do what? And take our 75% level from this high to this low. You can see, and I stretch it up to see where the market will get to. And as you can see, this happen, we will be taking our trade from here, set limit order, put our stop loss. Sometimes we have to give markets a little space to breathe, then we take 1 to 3. So you can see how nicely the market mitigates this level and do what? And hit our TP. So that's the process. Sometimes market will live without you, which is normal. Sometimes market will do what? Will mitigate you. But if you are consistent with this approach, this is just the psychology. Let me give you an instance. This is the psychology. The psychology is that market is doing higher, higher low, higher, higher low. You can see that we have what? We have low here. You buy here, let's say this is $100, and market get to $300, and some people sell. If you still want to keep buying, you will definitely wait for market to get to maybe 120, so that you will be able to buy and sell at maybe 350. That's exactly what the Fibonacci is all about. So you can see if the market get to your this level. So you want a price that is still a little bit cheap for you to buy and sell when the market gets to the higher level. That's just all what Fibonacci is explaining when it comes to this illustration. And you can see the same thing happens here. So that's just it, guys. If you have any question regarding to this strategy, regarding to this approach, drop it in the comment section or ask me question. I'll be available to respond to your comments. Thank you. Bye.